The market is ever-changing. It can be tricky to know when to invest your money and in what type of stocks. Will the stocks I decide to invest in remain in favor for the long term or short term? Pacer ETFs has teamed up with Lunt Capital Management to create a unique ETF that provides exposure to low volatility stocks or high beta stocks based on factor trends. Historically, factors have outperformed the S&P 500 in the long term, but move in and out of favor in the short term. Low volatility stocks exhibit lower price fluctuations than the broad market. These stocks have historically been less risky and provided more stable returns for investors over time. High beta stocks exhibit higher price volatility than the broad market. These stocks have historically been leaders during the most positive times for the market and have the potential to provide investors with greater returns. Let's take a closer look at the Pacer Lunt Large Cap Alternator ETF, also known as ALTL. This rules-based factor rotation strategy alternates between the top 100 low volatility stocks and top 100 high beta stocks in the S&P 500. ALTL reevaluates these two factors every month to gain exposure to the top performing factor for that month. This alternating approach lets investors stay invested in S&P 500 companies while rotating between these opposite factors when it is determined to be most advantageous. The goal of the fund is capital appreciation by outperforming the S&P 500 over time. ALTL's ETF structure is also more tax efficient than other investment vehicles, although investors are still subject to capital gains taxes when they sell their shares. To learn more about the Alternator series or other Pacer ETFs, visit paceretfs.com or talk to your financial advisor.